One of the most efficient ways of building your portfolio quickly is to invest and then recycle your cash for future opportunities. Two ways that you could progress this. One is to buy, refurbish and then remortgage the property onto its higher value. The second is to buy that same property, refurbish it and then sell it on and then release the whole value and the enhanced value. The first option, you're buying the property with an ultimate aim of refinancing it because you want to keep it. We need to work with your initial lender if you're going to be using bridging finance, short-term lending. We also need to work at the same time with the refinance lender as well, because one of the key and crucial things that you need to consider is your exit strategy. And if your refinancing arrangement is going to be your exit strategy, we need to make sure that the remortgage lender knows and understands what you're doing, how you've added value to that property, how you've increased the value from the purchase plus the costs of works as well, and you've now made it a more open market value for the better property that you've created. And by doing this in a particular structured way, that refinance product can not only repay the bridging finance that you've had to use, the cash that you've put in for the cost of the works, but also you'll be getting, all being well, a little bit of profit back out of that by refinancing it as well. So get all your money back and then recycle it into your next opportunity. Sometimes by going down this strategy, you will be able to get all of your money back. Sometimes there might have to be a little bit left in. That's dependent on rental income values, the stress tests, everything that goes into a refinance product and a buy-to-let remortgage. So that's the first strategy. The second would be to sell the property. And of course, you're not going to worry too much about a remortgage product at the end of it. You're buying the property, you're adding value, increasing its worth, and then selling it on the open market as that better value property. So recycling the cash is a two-pronged attack. You can either keep the property and refinance it, or you can buy the property, add value and sell it on. Either way, the end result is you're looking to increase the value of that property from its initial purchase price. All the money that you put into it shouldn't be a cost, it should be an investment. And of course, we're looking at a return on that investment, so looking to get the best value out of it at the end. Now, we're talking about the bridging finance and the remortgage. If you're going down the first strategy of keeping it and keeping the property once you've bought it and added value, you're going to need to work with the lenders who understand property investments, and they offer you the best value tools to do this. So working with professional advisors such as us at Property Tribes Financial Services, we know those lenders and the products that they offer that can help you put these pieces of the jigsaw together, that you've got the first stage of your bridging finance, your short-term lending to refurbish the property, and then the takeout, the remortgage products that we can put in place at the same time. There are a few lenders that offer what you might generically call the bridge to let product. They understand what you're trying to do in the first stage. They will help you to refinance and come off of that bridging finance product as your second stage element. There are other lenders where we would need two lenders in the mix, the bridging finance, because maybe they're offering the better value bridging finance product, and then of course you've got your refinance, remortgage, buy-to-let products as well. Recycling your cash is helping you to build your portfolio quickly, but we're not just talking about being a buy-to-let landlord, we're talking about running a business. And when you are running your property business, you do need to get the right finance in place, but also you need to make sure that you end up with the right amount of money as well. Tax can take a lot of that money out of a sale of refurbished property. The capital gains possibly might be built into your overall tax bills as well. So we don't just offer you a business plan, if you like, just on a mortgage process. We will ask for the accountants to be part of that. We will ask for all of the aspects to be put into the plan itself. The devil's in the detail. So we need to ensure that when you embark on your property investment project and you want to recycle your money, that you're going to be making a profit, whether you're doing it as a limited company, whether you're doing it as an individual. So many pieces of the jigsaw need to come together for the whole picture to work for you. With the experience that we've got as buy-to-let brokers, and we're landlords ourselves, so we understand it from that side of the coin as well. We sit down with our clients, we talk through all of this with you, point you in the right direction. Where we can give you direct advice, we certainly can do and will do. Where we ask for tax advice to be part of that, then we'll bring in the right property tax advisors as well. But business planning is a crucial part of the way you look at your business. It's not about being a buy-to-let landlord, it's about being a property investor, making sure that all of these elements are covered properly. And we can certainly point you in the right direction of how to put this plan together and make sure that ultimately you're making that profit that you're after.